Why on God's green earth is Bitcoin tanking? Did Grayscale rug us after they fought in court for a Bitcoin ETF? We're going to discuss that. Speaking of ETFs, we have James Seyffart, Bloomberg ETF analyst, joining us in about 30 minutes to explain to us what the hell is going on. Is this cash creates? Is this the death of Bitcoin price action as we know it? Also, Gary Gensler has spoken, Elizabeth Warren has spoken, and Larry Fink has spoken. Why on God's green earth is Ethereum running the $2,600, $2,700? We're going to get into that and much, much more with Forrest on Forrest Friday. Let's not waste any time. Let's get right into it.
Hola! It's your boy Big Rob back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we're the entertainment-focused cryptocurrency channel. We take old, boring, stale information, repackage that thing up in a fun and sexy way. Man, oh man, Bitcoin is dumping. ETF is out. Why on God's green earth?
Don't be stealing my words, man.
Don't be
stealing my words. God's green earth. I love God, I love green, and I love the earth.
Wow.
Green, lots of green. Different types of green, you know? Speaking of green, this man puts out nothing but green research that gives you green in your portfolio. I don't know where I'm going with this. Forrest is joining us. Forrest, how you doing, man?
I'm doing well. Green's my favorite color.
Is it really? Me too. Well, actually, blue's my favorite color.
I love a green portfolio.
Green portfolios are great. Speaking of green, we got a Cosmos video dropping after the live show. And if you're a member, you get early access. This was one of my favorite videos to record. You know, the Atom token has kind of been underperforming, but I'm going to highlight in the video how Atom is going to make millionaires in 2024 and exactly how and why and give you resources. So if you're a member, congratulations, you will get early access. And if you're not a member and you want early access and you want to support the channel, become a member of this channel. So, gentlemen, let's start right here. Coinbase, which has been at the forefront of these ETFs, being there the custodian, being there essentially the company that these authorized participants are going to say, hey, we need X amount of Bitcoin, or hey, we have this much Bitcoin, we need to sell it, Grayscale. $7 billion in Bitcoin transfers over the counter today, well, yesterday. And look at this parabolic chart here. Damn. And then I have this from Into the Block. Outflow volume on Coinbase, highest it has ever been. 23,500 Bitcoin yesterday flowed out of Coinbase. So why the hell is price tanking?
You know, I do want to say also as well, Rocco, if you pull up my laptop, Coinbase stock down over 5% on the day. So big pullback. I think people are looking at the price of Bitcoin and they are
it's a proxy.
They're selling Coinbase. Now, you say it's a proxy, absolutely. However, what people don't realize is that with all that volume, it is being custodied, and also the OTC purchases are coming from Coinbase themselves. So very dramatic, but just put in perspective where Coinbase is. This is on the 1 year. You can see that they are up almost they went from $48 up to $130.
About 3x.
Yeah, so about a 3x roughly there on the year-long performance. So you might look at Coinbase and say, hey, they're down today, but you know, they're the custodial agent for majority of these ETFs. They're also the go-to marketplace for the ETFs to buy and sell
they're also the go-to for miners when they sell their Bitcoin.
Yeah.
Keith Bosher said, why the drop? We're going to talk about that here in a sec. You know, we're going to talk about that right now. Why the drop? Here's the drop. So, you know, I've been vocally bullish about when the ETF goes live. And I'll be the first to admit, I undersold. I didn't expect how massive the Grayscale selling would be. Right? So Grayscale, 600,000 Bitcoin. Currently, they're the highest ETF as far as fees, 1.5%. As everyone is dropping, right? Franklin Templeton just dropped. We're going to talk about that here later. They dropped their fee. Grayscale is at 1.5%. So what are people doing? They're redeeming. Finally, they're able to redeem their shares for actual Bitcoin. That's what they're doing, and they're selling it. So this is from Akib Ablade on Twitter, on X. The Grayscale Great Withdrawal has finally started as of 15 minutes ago. This was tweeted this morning at 6:30 Pacific time. Yesterday, GBTC did not redeem any cash for Bitcoin and thus was not responsible for any selling. But looks like this morning that has started, as you can see here from the transactions coming out of Coinbase Prime. 458 Bitcoin, 600, 500, 700, 1,000, 1,000. So 4,000 in a matter of just 20 minutes. In a 20-minute time frame, 4,000 Bitcoin has been sold from Grayscale. Forrest, I'm going to ask you first. What are your thoughts on this? Is this something that you thought about? Has this surprised you to what level Grayscale has sold off? And just from a common sense standpoint, right? Because we're not ETF experts, but we have one coming on in a little bit. But in what realm would Grayscale keep their fee at 1.5%? Well, does that even make sense to you? What is going on here?
Yeah, I don't know specifically what their strategy is for the fee. I really don't. I would expect a pretty big exodus from GBTC if they keep their fee that high. But what's going on here is two things, in my opinion. So first of all, you have a lot of people that bought GBTC at a discount, at a major discount. I know a guy who he's one of the most patient investors that I know. He threw $100,000 into GBTC when it was trading at a 40% discount and Bitcoin was trading like $16,000, $17,000, right? So he basically bought Bitcoin effectively for $10,000 per Bitcoin, right? And now that premium or that discount has closed, he's able to collect on that and take massive, massive profits because not only was he getting Bitcoin at a 40% discount when it was trading around $16,000, $17,000, he's also getting more Bitcoin, 40% more Bitcoin than what he purchased. And Bitcoin's also 3x the price of where it was, right? So you have a bunch of people that took that trade, that took the discount by buying GBTC that are unwinding that trade. And that makes a lot of sense. Like the trade's up, it's finally liquid. It's been illiquid or it's been trading at a discount for so long. It makes total sense to take profits here. The other thing is because of this Bitcoin ETF, a lot of people in the market, a lot of market participants, investors, traders, funds, even exchanges to some degree, but a lot of participants in the market were extremely overweight Bitcoin and underweight Ethereum because this was the big catalyst. This was the big event. So this Bitcoin ETF trade has been going on for months, and we're seeing a rebalancing out of Bitcoin and into Ethereum. And I'll show a chart later. Just shows like this direct, like Bitcoin's been tanking, Ethereum's been going up. People are rebalancing, and the ETH Bitcoin ratio is starting to find an equilibrium. And all of those things kind of combined are kind of leading to Bitcoin selling off a little bit, while the rest of the market also takes a beating, with the exception of a few things, mainly in the Ethereum ecosystem.
Rob, what are your thoughts on what Forrest just said? And I brought this up yesterday, but we're starting to see it actually happening, right? Is this going to be up until the halving? Are we going to be seeing downward pressure enough to keep Bitcoin's price? Can it push it below $40,000? I mean, Forrest's case study with, I don't know if you said it was your friend or your neighbor. It makes sense, right? Investors, they could give a crap less about what Bitcoin stands for in a hodler. I want to make money. If I'm 10x on my $10,000 investment, I'm taking profits. Are we in for a bearish next month or two until either Grayscale brings their fee down or something happens? I don't know. What do you think?
All right. There's several things to take away. There's several things changing in the ecosystem. Okay. And I'll expand on that in a second. But what we're seeing with Grayscale, this is going to be short term. You're not going to have people taking profits, at least not to the magnitude that it is, say 2 weeks from now. So the people that are in massive profit, or say they're just up in their portfolio because they bought GBTC at a discount with a multiplier, which is the discount, the premium discount, and now people are taking profits. But also keep in mind that all of the selling that's going on Grayscale, because of the fees, it doesn't mean that everybody's exiting and taking profits. They might be selling there on on Grayscale's ETF and then simply buying on another. And that is happening at some percentage. I'm not sure what percentage it is, but it's not that everyone's selling BTC from Grayscale and simply saying, I'm done with Bitcoin. I'm done holding. I could have just simply sold it there. I'm like, you know what? I got 0.2% at a competitor. Let me get that versus the 1.5 over a factor of 7 on the fee. So if you're a savvy investor, you're in for the long term. It'd be smarter. It would be smart for you to sell on Grayscale, buy somewhere else on the ETF. I think that's happening. Now, I want to discuss who are the buyers on this ETF, right? This is traditional money, stock investors. This is not your green thumb here, never bought any crypto, or never made an investment. All of a sudden you heard some buzz at work and you decided to go buy some Bitcoin, right? You have traditional investors. And so they are probably letting the price settle in. What do we say here in the crypto world? Token gets listed, right? We say, hey, let this thing settle in. Let's see what is probably going to be overvalued in the beginning. So traditional, you can look at how Coinbase did with their IPO. They came out at a pretty high number, and then over the next few weeks, you saw the stock price drop, and then people in that, for the most part, signified one of the tops in the crypto market. And people were buying Coinbase stock at a discount from where it was initially when it went public. I think that is in people's minds, at least in Wall Street. They're looking at the Bitcoin ETF. They're probably thinking the same thing. Why doesn't this thing go live? There's going to be a lot of interest, a lot of buzz. And these traditional investors are like, I'll just wait for it to kind of settle down, and then I'll come in and buy. Also, institutions cannot just readily pull the trigger in the same way that me and you can. So they have to take their assets on hand, their treasury, their cash on hand, maybe sell bonds, exit their position in gold. This is a slow-moving process. But the process will, at some point, transition to that direction. Companies will look at BTC and say, hey, I would like to get a position here. Then lastly, I want to say this. I'm very curious on when the price of Bitcoin, if ever, which I do think will be set by the New York Stock Exchange. Now, what do I mean by this? Right now, the price of Bitcoin is set by what it's trading on exchanges, right? So you have the order books for buy and sell on all the exchanges globally, and the order books and the average price for each exchange sets what the price of Bitcoin is. And right now, the ETFs are not a factor into the price of Bitcoin. Now, you can make an argument that, hey, other commodities that trade on the stock exchange, especially the ETFs, set the price for the underlying asset. So if all of a sudden there's some news on oil, or a ship gets attacked, for example, out there in the Bering Strait, for example, you'll see that the ETF, the barrel of oil, will start selling off on Wall Street, and then in turn, the underlying asset will that price will move. So it's not so much the companies that are selling the oil that move the price. It's the market that moves the price, and the market is dictated by what's trading on Wall Street. So when all of a sudden there's more volume going on Wall Street than there is in the traditional exchanges, I think that Wall Street will set the price of Bitcoin, because right now that's not the case. And more money is just going to keep coming in. So I don't know how long that'll take, but I do think that Wall Street will set the price of Bitcoin instead of the order books on exchanges. And money is coming in very soon.
Yeah, I think let's not lose sight of let's not think too short term, right? Let's remember, like Rob said, these things do take time. And although this launch hasn't been what a lot of people have expected, because it's all new to us, right? I'm not an ETF expert. Neither is Robin. Neither is Forrest. I'm not a Wall Street expert, right? Neither is Robin. So it's all new to us, but understand that there's a reason these large asset managers have decided to file for an ETF. There's a reason there is a fee war going on. There is a reason that people like banks like Goldman Sachs jumped in last minute and said, we want to be an AP for this product. There is a reason. And although we might not see it clear now, I think once this grayscale issue subsides, and then once the halving comes, I think it's a no-brainer. What else is a no-brainer is our channel sponsor. Big shout out, Cam's Blue Wire Tech. If you want to learn how they can help your business scale, grow, and maximize your networking, IT, and cybersecurity, visit BlueWireTech.com or click the link in the description of this video. I want to call some people out. Where is Jimmy? Where is Billy? Where is, I don't know, Big Dog Chris is in here, one of our newer whale members. Also, to our newest whale member, jump in our Discord, ping us, and we'll add you to the whale chat. So, Simon, yes, Simon. Simon, where you at? Say what's up, man. I want to give you a recognition you deserve, my friend, for supporting this channel. Now, with that being said, Robin, please yell at some people. The likes are not there.
All right, so we have 200 viewers, 68 likes, so pretty low on the percentage there. So smash the like button, support the channel to get some more people in here. Also, if you are new, say hello so we can drop an hola back at you. We do have GT Nuts, Shoney, Wrong Again, and Road Glide, Space Ape. To all of you, hola! Welcome to Sin City Crypto.
My apologies. Billy said he's driving. Billy, do not text and drive. I appreciate you being safe, my friend. What a guy Billy is. Billy, I love you, man. You know who else I don't love? It's Gary. Gary G is here, and let's listen to what he had to say. He's such a scorned man. Such a scorned man.
Joining us right now, first on CNBC, following that decision that some have described as historic, is SEC Chair Gary Gensler. Chair Gensler, we appreciate you being with us. Let me start by asking you this. Do you consider the decision historic? And it appears that it's a decision that you made either reluctantly or perhaps even begrudgingly.
Well, look, Andrew, this has been considered for a long time. As you know, starting under Chair Clayton, we had disapproved a number of these over the years, and something had changed. I'm a deep believer in the rule of law and a respect for the courts, and taking a new court decision into consideration, we move forward. I think this is the most sustainable path forward.
So it appears, though, from what you're saying and reading through the decision as well, that what changed is not necessarily something inherent to crypto or Bitcoin per se, but what changed was what the courts did. Is that the way to think about this?
Well, again, I mean, we do everything here at the Securities and Exchange Commission within the law and within how the courts interpret those laws. And that's what the American people expect, and that's what we do here.
What is your message to investors about Bitcoin now? Because we're going to have all sorts of public investors now potentially have access to Bitcoin in a way that they didn't before. We were just talking to Larry Fink. He said that he got a huge wave of new investors getting into Bitcoin through this ETF. You have still suggested to be cautious about it, and I'm trying to understand how you think about those cross currents in terms of the message you're telling investors.
Well, look, Bitcoin itself, we did not approve, we do not endorse. This is a product called an exchange.
You don't approve Bitcoin, you dummy.
Traded product, a way that investors can invest in that underlying non-security commodity called Bitcoin. But yes, investors, I think, should be aware that the underlying asset is a highly speculative, volatile asset, and amongst its use cases is really for illicit activity, money laundering and sanctions and ransomware and the like. And I know that you've asked other people over the last few days, is it being used as a store of value? It's a speculative, volatile store of value. Is it being used as a payment anywhere? Are we buying cups of coffee with it? Not really. the only payment mechanism it's being used for in sort of in a primary sense is illicit activity. So I think you've been spot on about that, Andrew.
El Salvador is known for their coffee trade. So, I wouldn't be surprised if people are buying cups of coffee in El Salvador with BTC. I would actually push against that entire narrative. I think there is a big push into buying your coffee with BTC, just not here in the States.
It's a great case study. Any quick thoughts on this before I move on from our friend Gary here?
Yeah, I mean, like, my question is, if it's all about protecting the consumer, why is it that I can download DraftKings or I can walk into a casino and put my life savings on the roulette table, which I know is not going to make me money in the long run? Why is it that I'm allowed to do that, but like the thought of just like getting the ability to invest in Bitcoin through an ETF on major exchanges, or why stock exchange? Why is that so difficult? Like what the disparity between the laws in the United States just make no sense. It just like I don't buy into the idea that they're trying to protect us at all.
Before we bring on James, I do want to take a look at the cryptocurrency markets. Bitcoin, $43,500, down 6% over the last 24 hours. Forrest, let's take a quick peek at Bitcoin, if you don't mind, on a Bitcoin chart. 43.5. Is this a level we should expect maybe some consolidation unless we do see some big sales again from Grayscale? What are the charts saying?
Yeah, for sure. I'm sharing my screen here, so let me know if you can't see it.
No, you're good.
We've got a couple of levels here, and this is exactly why on Wednesday I was asking the question for anybody who was looking to buy Bitcoin, like, why buy it now? Like, why buy it now or on Wednesday versus buying it a week ago, 2 weeks ago, right? So on top here, what I've got the Ethereum chart, right? Ethereum line chart. We see Ethereum going up, and we see Bitcoin going down. That's just like I mentioned earlier, the market's kind of recalibrating to the fact that everybody was overweight Bitcoin for this ETF trade, ETF catalyst, and underweight Ethereum. So we're seeing the market kind of level out. So I think you're seeing a lot of money coming out of Bitcoin, reallocating, and I think this will normalize. Overall, our general trend here is still completely fine. I mean, we haven't broken any major lows. We haven't made a new low. We have this nice, red easy band level that we're still trending in. But this is also why I always preach, risk management, and the fact that when we do get into these red easy bands, you need to be cautious. And I'm not saying that, we're going to see a mean reversion or a major correction. But we still have not back tested some pretty key areas, right? 30 to 35K. And again, I'm not saying we're going there, but I think it's entirely possible that we do back test the larger, part of the bottom of this range. It would be normal and it would actually be healthy. You a lot of times you don't want to be in a situation where you're seeing a big macro move where you aren't coming back down to back test stuff before you start moving up. The reason being is I would much rather, right? I'd be much more bullish on Bitcoin breaking through its all-time highs of 50 to 70K, the top of this range. Let's call it 60 to 70K. All of that resistance. If we first come back here and back test this before we approach it, right? I think we'd be much more likely. We'd have a lot more confidence in the market knowing that, hey, there's strong support at 30 to 35K. We don't have to worry about, that sets our risk limit, right? That sets our risk scenario. We know if we were to get rejected, we'd come back down there and hold support and bounce again, right? That's what gives the market a lot more confidence to move through some of these major milestones like our all-time high. If we just go straight up to our all-time high, I'm less confident in our ability to break it on the first try, and then I worry about a correction up there. So it's one of those things where just the way markets move, right? Regardless of what's happening in the markets, you have to see some corrections. Like very rarely do you see anything just go straight up with no corrections for years on end. Corrections are normal, they're healthy, they build support, and they're what give us confidence to break through some resistance in the future. You got to have a correction sooner or later. It's, would you rather have it now down to 30K or would you rather have it at 60, 70K? You can't have your cake and eat it too. So I think this is we're completely fine here in the short term, but we're just now not worried, but being aware of the idea that, hey, we could have a buying opportunity in Bitcoin. Now, I will say, if we get a mean reversion down to this 21-week simple moving average, down to 35, 36, 37K, I personally think that's a buying opportunity. I'm not in the camp of people that think, Bitcoin's going below 20K or going back down to 12K. And there are people out there that think that. I think that after a Bitcoin ETF gets approved, you get a 20, 30, 40% correction out of Bitcoin. That is an amazing buying opportunity. A 27% correction out of Bitcoin. I'm a buyer of Bitcoin down at 35K all day, every day. So again, not saying we're going to get a correction here. We are still intact. We are still trending upwards, but if we break this trend, it's time to start thinking about getting those orders in down here below 40K, because I think we could see that. If we hold here, we could see some acceleration. I think a lot of it's just going to depend on the overall market. The last thing I'll say is, now that Bitcoin these ETFs are trading in these ETFs, and through traditional finance instruments, I do think that we're going to see an increased correlation with the stock market, right? So I think it's going to be more and more important to be paying attention to what DXY is doing, what the S&P 500 is doing, what the NASDAQ is doing, because I do think we'll kind of recorrelate after we have this kind of volatile period at first. I think we'll kind of recorrelate eventually towards the S&P 500 as more TradFi funds and more TradFi players enter the space and start trading Bitcoin.
Awesome. Forrest, just really, really quick, can we take a look at the Bitcoin dominance chart? Just super quick.
It's at a flat 50.
Absolutely.
It dropped a little bit this morning.
Let me pull that up. Should just take a second. I've got it right here. Yeah. So it's in the short term on the 12-hour, after the Bitcoin ETF, it is cratering. But again, a lot of that is just because this is flowing. Like, everything was all about Bitcoin for the last 3 to 6 months. That since we got this, this ETF filing from BlackRock, everything's been all about Bitcoin. So everybody's been very, very overweight Bitcoin. Why wouldn't you be? Because this is in the long term, this is very bullish, and it was a very bullish event to happen for Bitcoin. But now we are already in a very speculative kind of bullish trend. And I think you're going to see a lot of money rotate out of Bitcoin and into altcoins, into Ethereum, and kind of rebalance the ratio. And we'll probably, see a bit of a mean reversion for Bitcoin dominance. I wouldn't be surprised to see us dip down, to 50, 49, 48%. And I think that would be fine. I think that'd be natural for the crypto market. I think Bitcoin dominance at 54, 55% is a little bit overextended, to be quite honest.
Awesome. Thank you so much for that, Forrest. We do have our special guest joining us, James Seyffart. This is now, I believe, his 4th time on the show. Love having him on, talking about stuff that we have no idea, honestly, about as far as being experts in. So, James, welcome back. Thank you so much for joining us. I know this has been a very hectic week for you, man. I am going to.
Well, I guess you do have an idea.
I kind of, yeah. And not to your level, because I saw you on a Twitter Spaces earlier. I know your colleague Eric was on one. It was a pretty heated back and forth. The crypto native people are saying, "Hey, this was a flop of a launch," and according to numbers, and so here I'll just kind of share this tweet, and I'll get your thoughts on this, and then we'll ask some more directed questions. But this is from one of the largest crypto channels, Rand Nooner, who runs the Crypto Banter channel. Say the Bitcoin ETF first day was terribly unsuccessful. Most people are reporting that 4.5 billion was traded. They are not analyzing the data. If you notice the numbers, you'll see that total was 4.6, but GBTC was 2.3. We're seeing some of the volumes excluding GBTC, some including. What is the benefit of excluding the GBTC numbers? Aren't they part of the ETF launch? And was it a successful day one?
One, it was successful. Two, Rand is talking about something I was talking about yesterday as well. I was saying that we were expecting a lot of outflows from GBTC. We now have those flows, assuming they're correct, which they have to be. We have 95 million that went out. So Rand is way overblowing the downside here. There is some possible slight risk that we actually are looking at flows from the day before it turns into an ETF, which I think are like that shouldn't have been possible. So we'll see. Basically, some of the reporting here on the shares outstanding data comes on a T+1 basis. But yeah, no, that's a BS narrative from somebody in the ETF world. This was a wildly successful launch for pretty much every single one of these issuers.
If you beat the drum for 3 to 6 months about how Bitcoin's going to moon or skyrocket, the fact that the ETF didn't double the price of Bitcoin, I think, popped some people's balloons there. But pretty interesting there. What is the is this kind of playing out kind of how you thought as far as the sell orders? I mean, is there a delay on the redemptions? Because it seems like one of the narratives we heard was that the selling from Grayscale isn't showing up till today. Is this typical to have like a delay on the buy sell from the ETFs?
It's not actually a delay in the underlying. It's just in the way the data is reported. So there is no delay in what's happening in the markets. It's happening live to keep the ETFs live. It's just that you can't. The data takes time to reconcile. It's not a blockchain. You can't see it live as it changes. These people keep this stuff close to their chest. So we'll know more information tonight, 8 p.m., 9 p.m. ish, and then we'll have flows after 10 p.m. most likely. So they need to reconcile all this stuff, but for the most part, like it's just tinfoil hat stuff as far as I'm concerned. I'm honestly kind of tired of it because, like, one, this thing is up 85% since we made the call that there was a 90% chance that it was going to happen. So like everyone's like, oh, it's not doing anything. It's like, what are you talking? What do you think the last few months have been? It definitely wasn't. That's what this was all about. And honestly, it's roughly flat. It's down a bit, 44-ish right now, 46 earlier this week. I mean, I don't know, everyone calling for massive rallies or a massive sell-off. I think we're somewhat wrong, but now we're starting to see a sell-off today. But I'll be watching, I guess. But I don't really fixate on price too much. I try to focus on what's going on with the flows and the trading volume on these actual ETFs, and many of them are having very successful days by any measure for a typical ETF. So.
Yeah, and then James, Eric said in the spaces today that the trading volume is like the bait for these investors, right? They want to see volume before they come piling in, and so us in the crypto world, and myself included, sometimes we're so like we want it now, we want it to happen right away, we want price to skyrocket, but in the world of traditional money, it takes a little bit of time. I do want to ask you, we saw Vanguard, Merrill Lynch, and I think another one was Northwestern Mutual. They're like, hey, we're not going to give access. I want to ask you, once these 11 are live now, right? We talk about, hey, who's going to get the most volume? They're going to be the leaders. Is it probable to think that, hey, we might see some other ETF filers come in maybe a month, 2-3 months down the road, seeing how successful it is with the amount of volume that's being traded, or you think, hey, this is the 11 we have, this is what we're going to roll with, for the foreseeable future?
Yeah, so there's only two that could come now. It's really Pando, which is a European manager that filed. You also have 7RCC, which is run by a woman with an institutional background, but is a Bitcoiner, and she wants to launch a Bitcoin fund that holds carbon credits so that institutions will be more likely to use or possibly allocate, due to like all the ESG concerns we hear from the political left for the most part of Bitcoin. Some of it accurate, some of it not. So she's going to launch that most likely in the next few months. I wouldn't be surprised if Pando doesn't ultimately launch, because I think what's going to happen here is there will be a significant number of ETFs that are that stick around, but a handful of these are probably going to end up liquidating in the coming year. And as far as your comment about like people not allowing to buy these things, look, those platforms always have a heavy hand in what they allow people to buy on their platform. Many of those platforms don't allow you to buy or trade like leverage ETFs and stuff either. So it's not that crazy. The one platform that did surprise me was Vanguard a little bit. I think we talked about on here. I never expected Vanguard to launch a Bitcoin ETF. It's against their ethos. They don't even have gold because they don't like things without cash flows. That's them stop not letting people to do this. I think was a mistake on their part to be quite frank. And it's very it doesn't make sense, the fact that you could still buy BITO, the Bitcoin futures ETF, but you can't buy the spot. It just they're doing something fish. They screwed up. So whoever made that decision didn't make the right decision, in my concern. And because even if you're going to do it, at least stop people from trading BITO on that platform too. Like it's a less efficient product.
Bingo. And which is what a lot of people have been saying is like, what are you guys doing? I mean, you can invest in like a Kramer inverse ETF on Vanguard, but you can't invest in a Bitcoin spot ETF who broke records on day one. You're talking about money, and we're seeing a kind of a trend, people moving their 401ks and IRAs from Vanguard to competitors like Fidelity and Charles Schwab. But James, I want to ask you this article from CNBC. Bitcoin ETFs have a key difference from their stock fund counterparts. The Bitcoin funds that launched Thursday are using a share redemption process. We talk about, the cash redeem. Most ETFs primarily use an in-kind redemption process where the underlying asset does not have to actually be sold. Is this I'm purely asking from a novice standpoint, if it was to be an in-kind versus the cash creates, would we still have seen this downward pressure on the price of Bitcoin and the underlying asset, or does it not really matter?
You probably would have. I mean, there's no way to know exactly what's happening, because what this really means is that if you're leaving GBTC or some other fund to go into these new ones, you have to sell the Bitcoin to cash. But at the end of the day, when you go into these new ETFs, you then need to use that same cash to buy. So there's no way to know. But at the end of the day, you're still going to have to be moving Bitcoin. So I think like maybe things would have operated slightly differently intraday if they were allowed to do in kind and move things that way. But I think the net overall approach probably would have been similar, whether it was in kind or cash.
Gotcha.
Yeah, I don't really have a complex view on the matter on that front, but I think for the most part, for most investors, you wouldn't be able to tell the difference between an ETF that is cash create redeem versus one that's in kind. Like if people hadn't been highlighting it, 99% of people wouldn't be able to tell a difference between one and the other.
That's very true. James, can you and I don't know how much insight you have on this, but we've been scratching our heads here saying, there's a fee war going on. I know Franklin Templeton just reduced their fees. And then here we have Grayscale, who owns 600K Bitcoin. They're at 1.5%. Do you have any insight or anything as to why are they not trying to compete to keep money in their fund? And why are they just destroying the fee structure that we have going on here? You have any insight you can share with us? And as far as what is going on, why they haven't moved on their fee?
Yeah, I mean, there's one simple answer: they don't have to.
Wow.
Like why? So like really, it comes down to this, right? You're used to charging 2%. That's tens, hundreds of millions of dollars, depending on what the value of the underlying asset is. Everyone's now at zero, or 20 basis points long term. So 0 for 6 months in most cases, or 20 basis for long term. Franklin Templeton is actually the lowest cost now at 19 basis points, but again, they're also to zero. So if you're Grayscale, you coming over with embedded liquidity, you have the most assets. What is the most profitable event for them, how to do this? And like basically, if they were to cut their fee by 90% to 20 basis points, then the alternative would be, so if they kept it at 2%, it would be like we'd still be making the same amount of money if we kept 10% of our funds, and they're likely to keep way more than 10%. So they were like, all right, we'll meet in the middle, go to 1.5%, and we're going to still keep, I think, a lot of our assets. And if the flow numbers we're seeing are correct, and they're actually after market close yesterday, they only saw 95 million in outflows, and I thought for sure they would see way more than that. So we'll see what the numbers show after tonight, after the trading day today. But that was absolutely shocking to me if that holds over the near term, because that means that the net flows into this thing were on the order of what did I tweet out? 655 million went in on day one, which even on an individual ETF basis, that's not breaking any records, but it's a hugely successful launch. And all of these each had pretty successful launch. You have Bitwise that took in 237 million, Fidelity took in 227, iShares took in 112, Arc and 21 shares took in 65, Franklin took in 50. I mean, these are This is a lot of money. Like, I don't understand why people are upset by this. They're absolutely insane. They don't understand how ETFs work, or they have a different agenda.
I think it's both, James. Everyone, in the crypto world, even going back 3-4 years, everyone's used to 2, 3, 4xing their money every 2 to 3 months, and there's this catalyst that like you mentioned, we're not ETF experts. We don't know how the hell this thing works. We don't know what's successful, what's not, and so crypto is people in crypto, and again, myself included. Sometimes we're very short-sighted. We got to start thinking bigger picture, as these investors that do come in and participate are going to be participating in Bitcoin are the longer term horizon investors, as they are putting these ETFs in their 401ks and their IRAs. Our friend Forrest, who's joining us today, I believe he was on the very first time you joined us. I believe he had a question that he wanted to ask you, James.
Yeah, for sure. So I think one of the more interesting aspects about this ETF is the fact that Bitcoin's a 24-hour market. It doesn't sleep. And these ETFs don't trade 24 hours a day, unless I just totally missed something. Curious to get your thoughts on what you think the implications of that are. And my guess and my hunch is that we see this, maybe dampen volatility because it attracts longer term investors that aren't looking to hold this, or they're kind of looking at Bitcoin as a longer term investment, or these ETFs as a longer term investment, because they have to hold it through weekends. They have to, they can't sell on weekends, and they're going to just be longer term minded. Would you agree with that, or do you think there's any other implications that people should take into account as far as weekends go for Bitcoin trading?
Yeah, I mean, for the most part, this is the way the world works, really. There are already ETFs that have stuff. So futures, for the most part, trade like almost 24/7, right? Currencies do, and ETFs hold those things, and they operate just fine. Honestly, the bigger issue and concern would be if the ETF was trading when the underlying asset isn't, which there's plenty of ETFs that do that. We have Japanese equities, other international equity markets that are trading when the US isn't, and are not trading when the US is. That's a bigger hurdle, because then the ETF at that point is trying to figure out where the market will open when it does open. And even still, in those cases, the ETF operates extremely efficiently at sniffing out where the price needs to be. So I don't think it will be. Basically, this is a known entity. It's a known problem, and it's not even. I wouldn't even consider it a problem. It's just a known fact of how these things work, and it's not something I'd be concerned about unless you're somebody who's like literally day trading, I guess. Then it might matter, but for the most part, it's kind of irrelevant as far as I'm concerned.
Awesome. And then I had a
Did
question.
that answer your question? Was that basically what you were asking for the most part?
Yeah, for sure. I'm just thinking, like, are we get in a situation where Bitcoin spot price tanks 20% on a Saturday? Does that make these ETFs any less attractive to people, or do these investors just have longer term time horizons? They'll just eat the drawdown, and they have a longer term view.
Yeah, I mean, it's the same with any other financial asset in the traditional world, right? Like, look at a stock. If they often do announcements after market close or before market open, and then when it opens, it meets the market where it is. That's the beauty of an ETF. Like, the value of the shares are going to match the value of the underlying asset within a little range. We call it the arbitrage band, but within a certain range, they're going to match the underlying asset. So it'd be no different if, like, a CEO announced that, like, they did something catastrophically wrong, or have a lawsuit, or you name it, any sort of bad news or even good news.
Or
A
Elon
lot of
Musk.
that can happen after market.
I was gonna say, or Elon Musk goes on Joe Rogan's podcast on a Saturday and smokes pot, and Tesla tanks on Monday.
Yeah, exactly. Yeah. There's ways to trade, and also, like, there's pre-market and post-market trading too in these things. So it's, yeah, I just people are used to it that are in these markets. Like, it's how most of the world currently operates. The 24/7 is the part that's different for them, honestly.
And then in your opinion, and I don't know if you have the answer to this, but the way that Bitcoin has traditionally found its price is basically the average that is selling for an open on the open order books on the exchanges. And so it's buy one side you have the buy wall, the sell wall, and where is it at in the middle? You average out all the exchanges. And ETFs, have influenced the price of commodities like gold and oil, I mean, those are technically set by supply and demand of the assets, but there is a downward and upward pressure if all of a sudden the ETFs or some big news come out. Do you see any, or what do you expect the ETF to do for the influence on the price of Bitcoin, or do you think it's going to be purely reactionary to what crypto is trading for on the exchanges? Because that's where we've gotten our price from. You just plug in an API on a website from the exchanges.
Yeah. Yeah. Sorry, I didn't mean to cut you off.
No,
It's the same as those exchanges, right? This is just another input on the demand and on the demand side, whether there's less demand or more demand. So they're either going to be selling the Bitcoin on those exchanges or OTC. It doesn't really matter. We're buying it there, and that's going to impact the end price. So this is just another basically source for spot market demand. So it will impact the price when money goes in or out of it. The other thing I would add is I think it will decrease the vol of the asset over the long term, so years from now, because when people hold this thing, they're much more likely to use it in like a set portfolio allocation sleeve. So think like, oh, I'm going to put 2% of my assets or 5%. That's how advisors usually work. And once they have those set goals, if the price runs up, they'll sell. So they'll sell into a rally, which is what a lot of professional managers would do, and then they'll buy into dips. So like they might rebalance quarterly, and if Bitcoin is down 80% over that quarter or semi-annually, what have you, they're going to buy 80% more to maintain their allocation. So that's going to be on both sides of the trade. So decreased momentum potentially in both directions, I think, if these are successful at garnering assets.
James, I just want to, on behalf of not only here at our channel, but just in just a community, crypto community in general. I'm not sure if you got a wife or kids, but I assume you probably haven't seen a lot of them over this past week. You've been on a lot of channels, a lot of Twitter spaces, and really taking time out of your day to keep us in the crypto space informed, man. We just wanted to thank you so much to you, your colleague Eric. If you're ever in Vegas, my man, hit us up. We'd love to. Dinner on us, drinks on us, whatever it is, man. You deserve it. Thank you so much. We appreciate your valuable time. And any last things you want to say before we kind of let you go?
Yeah, relax. This is a long-term game, right? So pay attention over the long term. Look to what's happened over. If you want to go short-term, pay attention. Look over like a week. Don't look at just the daily stuff. Specifically in this market, there's going to be a lot of shifting of capital around in the coming days, and a lot of it will likely be recycled exposure to Bitcoin coming into these ETFs, not necessarily new capital, as evidenced by the price. Obviously, some people are selling no matter what, but I think if it was all if it if it was all money just leaving GBTC and not going anywhere else, we'd have seen other impacts on the price and probably greater impacts on the price of the downside. But obviously, a lot of this money coming in isn't net buying from out of nowhere. It's not cash coming from money market funds. It's probably capital that was already exposed to the space. So this is just going to be a more efficient way to do it for many different players, and we'll see how it works out long term. But those bigger fish I was talking about, the advisors, the wirehouses, the brokers, institutions, they're not coming in day one. That's never going to happen. That was never going to happen.
Right. Very well said, James. Again, man, thank you so much. Enjoy the weekend, my friend, and we'll see you next time.
Thank you.
Take care. And guys, there's only 2 Twitter accounts that I follow for all the ETF news, and that is James Seyffart, which I have pinned to the top of this chat, and then also Eric Balkunas, his colleague over at Bloomberg. So big shout out to James. Big thank you for the entire team. And I'm going to send it over to Rob for a little housekeeping. Robin?
All right. If you are new here, say hello so we can drop an hola back at you. 371 people. The chat is a little quiet, so I'm sure there's some new people in here that haven't chimed in yet. Say hello. We'll drop an hola back at you. We got Jonathan Guerrera, Thorham, and Mark Dutch. To all of you, hola! Welcome to Sin City Crypto. Also, we are still underneath the 50% like threshold. It's about 40% of y'all have liked this. So let's get the other.
Yeah, what is going on, man?
Yeah.
Guys, come on, dude.
Yeah.
You understand the favors I had to pull to get James back on here on a Friday, 2 days after ETF. If you like these type of guests, at least you can do is like the damn video, man. Please. I'm begging you, please. We don't ask for money on this channel. We only ask for you to like it, damn it. All right. Let's talk about, speaking of money, a man who's got a lot of money is Larry. We ain't talking about Robin's bird. talking about Larry Fink. Listen to what he had to say. Just listen to what he had to say.
I believe, I believe it goes up if the world is more frightened, if people have fearful of geopolitical risk, they're fearful of their own risk. It's no different than what gold represented over thousands of years. It is a asset class that protects you. Right. And unlike gold, where we manufacture new gold, we're almost at the ceiling of the amount of Bitcoin that be created.
When you hear somebody like Cathie Wood,
yes,
who was on our broadcast yesterday, say that her base case is that this turns into a $600,000 a Bitcoin valuation, base case, and a million plus in a super optimistic case. Are you anywhere in her realm?
I haven't thought about it. To me, that what we are trying to do is offer an instrument that can store wealth. I think if it gets that even close to that high, gold will represent even a bigger value. And let's be clear, if you think it's digital gold, there's going to be a reference point between gold and Bitcoin.
I'm curious. Has Larry Fink been orange pilled, or you think he's just saying this to get more people to buy into his product? Also, I want to make a point. When the host asked him, Cathie Wood said 600K. What do you think? I haven't thought about it. So, which brings me to a thought, right? We see on Crypto X and on YouTube, and they're driving the price down because they want to get a better entry. They could give a shit less about the entry price of Bitcoin, right? Because it doesn't matter to them what price they buy, because they buy after the fact of where the ETF buyers are buying the shares at. So it doesn't matter if they're buying Bitcoin at 100K. If enough people want Bitcoin at exposure to Bitcoin at 100K via the ETF, they're just going to go out and take that money and buy it. It doesn't matter if they're buying at 10, 20, 100. As long as there's volume, which is why these ETF analysts like James are saying volume is what matters. As long as there's volume, they're going to keep pushing Bitcoin. They're going to keep talking about how great it is. Also, I want to make a note. If you are investing in Bitcoin for the simple reason of what Larry is saying here, that it protects people, you're not going to get that protection from an ETF. You got to buy it from an exchange like Coinbase, take it off and hold it. Forrest, I'll go to you first. What are your thoughts on what he said? And you think Larry's been orange pilled, or you think he's just trying to push his product?
No, I don't think at all that he's been orange pilled. I think that he's looking at the entire crypto industry with money signs in his eyes as a way to make money. And the next big push for BlackRock is going to be in the crypto space. He was talking about tokenized assets and essentially an Ethereum ETF. Said an Ethereum ETF made sense. So what I think is going on is he's looking at crypto as an emerging market, a very fast growing market. He's probably seen massive market research that shows that the younger generation is heavily investing in crypto at an accelerating rate. And he's positioning BlackRock to build out products and offerings that benefit them and make money off of this growing market. I don't think it's anything other than that. And I think he's just now got an incentive through this Bitcoin ETF. They earn a fee on the ETF. He's now incentivized to talk up Bitcoin. And if he was incentivized to talk up Ethereum or any other altcoins, and eventually he will be, he's going to talk those up as well. This is all about BlackRock making money on crypto under a long-term view. Being the casino, being the house. This is not about individual asset prices. He does not care what Bitcoin does as long as it's an attractive investment for people to put money in. This, I think, is underlying, like we talked about on Wednesday, very bullish for Bitcoin. Like we talked about differentiating between the decentralization of Bitcoin and the core ethos of it. I don't think he cares about that one bit. And we talked about differentiating that from the price. What's good for the price of Bitcoin? Well, what's good for the price of Bitcoin is these large asset managers and Larry Fink having an incentive to go and talk up Bitcoin as an investment and make it sound like a really good investment so they can make money off of it, so the price ends up going up. Yeah, I don't think he cares. I don't think he cares in the slightest about the technology or the ethos or anything. I think he just wants to make money off of crypto, as do a lot of people.
Robin, do you agree? I agree, of course. I think care less.
No, I actually disagree. I don't think
You think he's been orange pilled?
I don't think he's been orange pilled to the point to where he wants to personally use it, or he is bullish on the tech. I'll say that. I don't think he's bullish on tech, but I think he realizes that it is a disruptive technology that is gaining adoption, and it's going to take up some market share in both a store of value and as a movement of money, in some capacity. And so he sees what it is. He knows it's not a scam. When they went to list it, I'm sure at some point somebody had to sit him down and be like, hey, we want to offer this product. What do you think? Here is the trajectory of Bitcoin, its market adoption, people that are going to want a position on it. We're a money manager, and people are asking us. I'm sure they've said, hey, we've had X amount of requests for Bitcoin or inquiries about it. So I think he looks at it like it's here to stay. Now, whether or not he believes in it himself, he thinks it's a better alternative to fiat and gold, that I don't agree. However, from a business standpoint, he knows it's going to be disruptive. It's going to take market adoption, and it's going to take money away from other markets. And why not facilitate the market on your own platform? Why not expose your own customers to getting a position on that as well? So he mentioned also the ETF for Ethereum. I think they're going to throw. They haven't filed one, right? BlackRock.
Well, here you go.
Have they?
They haven't filed one, but
Yeah, they haven't filed one yet.
read that out loud.
So CEO says he sees value in having Ethereum ETF. So so there's already a spot ETH ETF filed, right?
Yes.
Very comparable to what we had for Bitcoin, right? You had ARK Invest coming up with the deadline, and then lo and behold, in comes BlackRock on the back end. If BlackRock didn't come in, they probably would have denied ARK, right? Now, they say it was influenced by the courts, but let's be real. The reason it got passed was because BlackRock threw their hat in the ring. Now, the next ETF for Ethereum, the deadline is on May 23rd, 4 months away. So let's just say that over the next month or 2 months, the Bitcoin ETF starts to make BlackRock a ton of money, or at least bringing in a lot of new customers and users that are migrating perhaps their portfolio over from Vanguard to BlackRock. Either way, I think that what's going to happen in the next 2 months is that BlackRock is going to see the value of having this Bitcoin ETF, and it is going to pay off for them ultimately in the long run. And in turn, they're going to see the same opportunity arising with the Ethereum spot market. And they know that if they throw their hat in that ring as well, that one will probably pass. They got 4 months, May 23rd. That's the next deadline, the final deadline. So I do think that that's a day to circle on your calendar. If you're a big Ethereum fan, keep an eye on that one. I do think that BlackRock will influence that one as well.
Speaking of influencing, the man who influences markets more than anyone else officially said major top is in for Bitcoin. Are we getting ready to hit 50K?
And to buy.
And then I do want to share this also from Mr. Fink, talking about ETFs revolutionizing technology and blockchain. Listen to this.
Let me be clear. I think ETFs are step one
Right.
in the technological revolution in the financial markets. Step two is going to be the tokenization of every financial asset. And to me, this is where we believe it's going. So we're looking at Bitcoin, we're looking at ETFs in the same manner. These are technological changes that can allow us to move forward. Let me be clear. I think ETFs are step one.
Bro, I mean, all I heard was Ethereum there, right?
No.
You're not going to tokenize assets on Bitcoin, right?
No.
Then where else are you going to tokenize? Where else are you going to?
You're not going to tokenize them on Ethereum. Well, you are, but it's very
I mean, for
Avalanche,
BlackRock,
Chainlink.
if BlackRock
Probably
says,
Chainlink.
if he's bullish on this idea, he might not be orange pilled, but at least he's got his eyes open to what crypto offers. I think a lot of other CEOs of major money market
Jamie
funds,
Dimon.
they are not talking about the benefits of blockchain and the tokenization of real world assets, and perhaps the tokenization of derivatives, and saying that, hey, this is new technology that is not only going to be disruptive, but be the go-to means for tracking and tracing derivatives, securities, commodities, everything, right? I think that's what he's saying. And it makes sense that it goes to Ethereum, man.
No, it doesn't. Forrest, when I say real world asset tokenization, what are some chains or projects that immediately come to your mind?
I think one of the leaders there is Polymath or PolyX, if I'm not mistaken. They migrated their token, so they changed it. But they're like specifically all about being like regulatorily friendly. Yeah, it'll be interesting to see how this plays out, because when you talk about tokenizing stocks and real world assets, there's you imagine a world where like you're trading stocks directly on a blockchain, not like synthetic stocks, but like actual stocks. You have to take into account like one of the underlying things is like one of the underlying problems with like non-permission blockchains like Solana or Ethereum is like anybody can send anyone anything. So like imagine like you're a company or you're a fund that has an ESG mandate. Well, what if somebody sent that fund oil stocks, right? Or Chevron, BP, whatever, and then all of a sudden that fund received in their crypto wallet, in their on-chain address, they were not able to block, but they received it, because that's how blockchain works right now. That's how Solana works. That's how Ethereum works. They received oil stocks because somebody was trying to be funny. Like we see this happen all the time, where people send Vitalik Buterin a meme coin, or people send just $1 million of Bitcoin got sent to Satoshi's wallet like last week, which kind of got glossed over in the news, which is really bizarre. But you kind of have to have like these hybrid regulatory friendly blockchains that are a little more centralized and more permission to really onboard real world assets, because of the laws that exist around trading stocks and such. So I don't know exactly what chain would be best suited for trading stocks or tokenizing these assets like he's talking about. Maybe it's a layer 2 on Ethereum eventually that has more regulatory compliance.
Sorry.
Maybe it's something like what's that?
Chainlink. Oh, what is it?
Maybe, perhaps. I don't know what the front runner would be, and I don't even know that BlackRock at this point knows what the front runner would be. I'm sure they're researching and looking into it.
I only say Chainlink because A, connects public and private blockchains, and B, if their vision of being the entire liquidity pot of tokenization comes true, then why wouldn't you, right? If you can dip into that bucket from anywhere, from any blockchain, from any layer 1, any layer 2, any private chain, why would anyone not use it? I do want to, so just real quick, Geronimo mentioned Injective, and we did have an article here we're going to go over. Injective embarks on a new era with the Volan mainnet upgrade. Injective, a pioneering entity in the realm of Web3 finance, has now marked a significant milestone with the launch of its most extensive mainnet upgrade to date. The Volan upgrade is not just an incremental update, it represents a leap forward, establishing Injective as a frontrunner in the space. The upgrade encompasses the introduction of the world's first native real-world asset infrastructure, significant enhancements in blockchain scalability and interoperability, novel token burn capabilities, and various other groundbreaking enhancements. This is a narrative that's going to continue to heat up going into this year and into 2025 and beyond. And so keep your eye out for projects that are putting a real-world asset tokenization at the forefront. And how do you do that? You watch shows like Sin City Crypto. You follow people like Forrest. Speaking of shows, we are doing a special live stream Monday evening, a 100% trading-focused live show, the 100X with Bing X, Monday at 8 p.m. Eastern Standard Time. Super, super excited for that. Well, Robin unveil a new chart pattern. You'll have to just wait and see. Also, guys, if you're not following Forrest on Twitter, go follow him at Sistine Research. And if you want some of his insights, his research, there is an affiliate link in the description of this video. And he does live stream on YouTube as well at Sistine Research. And also, big shout out to our channel sponsor, Cam's Blue Wire Technology. If you want to learn how they can help your business scale and grow, visit bluewiretech.com. Kind of disappointed, man. The likes didn't even get to 200. Shame.
I'm not disappointed in some of the new people that popped up.
Wow.
We got G, Rashid, Crypto Redneck, Zen Guy, Trump Whoppers, Paul B, Rain here, Zen Guy, and Atukin Akaya. Hola! Welcome.
Gentlemen, are you excited for the weekend? Forrest, any big plans? You gonna put in some trades with the baby?
Baby tree.
No, probably be pretty locked down, taking care of the baby. I don't know if we have any big plans yet. We'll figure that out probably tonight and tomorrow. I know it's kind of a boring answer.
Yeah, it's okay. I got an exciting answer that's going to drain my bank account. My brother's birthday today, so big shout out to my little brother, Ray. Happy birthday, my friend. Dude got rugged, man. He won Chef of the Year for Benihana, and they cut the check, the $5,000 check, and they made a name tag for him, and then they're like, actually, we saw you posted on social media, so you're disqualified. Stupid. And then my son's birthday, we're celebrating his birthday on Sunday, so if you have a birthday, happy birthday to you. Also, members, you're about to get a video dropped here in the next 2 minutes. So enjoy the video. It's on Atom and Cosmos and how you can make a lot of money by staking one Atom token. So watch the video to find out. If you're not a member and you want early access, hit the join button on your phone. You'll be supporting the channel. And with that being said, Rocco. Big thank you to Forrest. Big thank you to our special guest, James, for joining our show. We hope you enjoy the content this week. Make sure to come back Monday, 11 a.m. Pacific, 2 p.m. Eastern Time for our live show. We'll see you then. Peace.
Crypto. Everybody know we here for entertainment and info. Gonna show you how to get that big dough. So every day stay tapped in for big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I split the game, but they gave it. Named according to your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy the dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major grin. Laggers, we trade them in. Baddies, they came to sin. And sinners gon' play to win. Screaming, hola, till my bags are flowing over. Hold ya to the moon and to the solar. Won't I? Don't be letting FOMO